Good afternoon, everyone, and welcome to Stock Market Today for Thursday, June 1st. It's Allie, Coram, and Ken Shreve here to break down the action in today's session and a bullish day. The Nasdaq retaking a key level with ease, Ken, and we got some breadth to go along with the strength.
We've got some breadth that we've been hoping for. Not great. It was about 2-to-1 positive on the Nasdaq, and maybe close to not quite 3-to-1 positive on the S&P 500, but better than what we've seen. So we'll take it. Plenty of stocks to watch today. We'll take a look at Crowdstrike, which reported earnings and had a tough start to the day, but nice rally off lows here. Also take a look at Cloudflare, NET, still showing relative strength, and finally one of the rare bright spots in the oil and gas sector, Tidewater, TDW.
All right, let's do it. First, let's take a look at the major indexes today. The Nasdaq up 1.3% by session's close. The S&P 500 up 1% today. The Dow up 0.5%. Also a pretty strong gain for the Russell 2000 today as well, up about 1%. So we've seen a lot of momentum in this market, and as the week has progressed, we have been saying, okay, how is the market going to digest this strength? Are we going to see the strength continue? Are we going to hold up well? And Ken, it looks like as of now, we're continuing to hold up very well.
Yeah, really not much consolidation at all here. You can see that nice move above the 12,200 level. That was the initial breakout, and still holding above short-term moving averages here. So we're at a point now where you can get a pullback down to the 10-day line, even the 21-day line, and just looking at the scope of the recent gains might be regarded as a fairly normal pullback here. So, but Nasdaq retook that 13,000 level with ease. Our earnings reports, pretty good first quarter earnings season. We're at pretty much the end of it, but earnings reports have been solid, and the dollar weakened again today, and so that probably helped stocks a little bit. But we've been in a confirmed uptrend for a while now, and the confirmed uptrend is still very much intact. And this 13,181 level that you just highlighted here is, maybe an area where the Nasdaq might back off highs a little bit, consolidate, and maybe prepare for another upward thrust.
So Ken, I feel like the conundrum now is we're starting to see breadth, we're seeing setups, we're seeing stocks work. We're seeing a lot of extended stocks too, especially the leading chip stocks. So how do we handle exposure here? If we are at a point where we could see a pullback, does that raise the risks for adding exposure at this juncture?
Well, probably. I mean, we've been talking about that the Nasdaq is maybe starting to look a little extended from its 21-day moving average. So right now we've still been sort of in the camp of 40 to 60% exposure. We're a little bit over that with the leaderboard model portfolio right now. So it's really, we always just say the market is going to tell you how aggressive to be. If you wake up one morning and all of a sudden your screens are yielding all these stocks setting up and volume is coming into them, I think the market is just going to tell you to put money to work. We're still, we're in a confirmed uptrend, but at 60% exposure, it's not like buy candidates are teaming. We did see some actionable stocks today, so that's an improvement. But if this uptrend continues to work, we should see more setups. But even better if we do get this pullback as the Nasdaq approaches this recent high of 13,181. That would even maybe set the stage for even more setups to pick from.
Exactly, because it feels like the best times to buy are when you have that alignment of setup, right? When the market is in an ideal buy spot as well. So a pullback could be really good.
Yeah, I think a lot of people would like to see that at this point. Some stocks have just made such tremendous gains, particularly in the large cap technology sector. I mean, they're due to pull back and digest a little bit. So we do have a key jobs report tomorrow, and these monthly jobs reports have become more important as the Fed tries to engineer a soft landing for the economy. So we'll see what the jobs numbers look like tomorrow and what the market's response is. But so far so good. We've been increasing exposure moderately. I did it again today with leaderboard, and feel like we're fairly well positioned. And if the setups continue to emerge, we'll be able to increase exposure even a little bit more.
Mm-hmm. Okay, let's take a look at the S&P 500 as well as your S&P 5 in MarketSmith. So it looks like we're trying to get a breakout above that 4,200 level for the S&P here, Ken.
This it looks like a closing high that we haven't seen on the S&P 500. I think you'd have to go back to last year to see when the last closing high was made. So yeah, this is a kind of a lagging index at this point because the strength has been in the Nasdaq. But you can see just from the S&P 500 weekly chart here, it's still in the early stages of trying to come out of a consolidation here. So this has still got some resistance to punch through. But and we do have still a fairly elevated distribution day count on the S&P 500. But the trend is up, and the action in individual stocks continues to look pretty good.
Mm-hmm. And now let's take a look at the Dow, talking about a lagging index here, Ken. The Dow and the Russell are still struggling.
Still struggling. Probably, the Russell 2000 even more, because the Dow is, as you can see, kind of firming up at the 200-day moving average here, finding support so far. So we'll see if it can break out of this downtrend. It's going to have to get above those short-term moving averages. And I'll tell you, if the dollar continues to weaken, a lot of these blue chip companies that do a lot of business, sell a lot of product overseas, that would help their earnings. So a lot of these blue chip stocks certainly wouldn't mind seeing continued weakness in the dollar. We'll have to wait and see if that scenario plays out.
All right, and now we want to take a look at. I actually want to take a look at here. So the Nasdaq today up 1.3%. QQQ, the Nasdaq 100, up 1.16%. So what we have been seeing for the most part this year is the Nasdaq 100 outpacing the Nasdaq Composite. So I found that interesting today. But let's also take a look at QQEW. This is so maybe some mixed messages here, because QQEW not as strong as the Nasdaq 100 here, but on the verge of a breakout.
Yes, and again, just looking at the the Nasdaq breadth. I mean, this is a pretty good picture of how breadth is starting to improve. This looks a lot different than the equal weighted S&P 500 ETF, which is still on a pretty sharp downtrend. That's RSP. So, here again is that weak breadth being illustrated right here. But QQEW really looking good technically here, and yeah, I think there are reasons to be optimistic. It's anybody's guess how the market is going to react to this jobs report tomorrow. We've talked about all the the headwinds that are out there. A lot of people don't believe this rally, can't believe that the market keeps going up amid fears of a slowdown for the economy. But you can argue with the market, or you can you can swim with the market. Yeah, you can swim with the market tide.
Exactly. Yeah, the market loves to climb a wall of worry. We've heard that a lot. Also, it seems like what this is showing, QQEW versus RSP is tech, AI, chips, just the mega cap tech giants, anything to do with artificial intelligence, automation, software, warehouses, even data centers. That is what we are seeing really come to life in this market series.
Yeah, there's no doubt about it. I mean, Nvidia and Meta platforms have been big winners in the leaderboard portfolio, and these stocks are just I mean, you look at Meta platforms here. Yes, it's up at a point now where you'd expect it to kind of pause and consolidate gains. So we're probably near a time where the Nasdaq is going to pull back and digest some gains. But again, there are healthy pullbacks and there are unhealthy pullbacks. So we just get kind of a decline in lower volume. like I've said before, that's going to be preferable to adding more and more distribution days to the count, because if you really start to see meaningful signs of institutional selling, that can really stop an uptrend in its tracks. But and we had a distribution day yesterday for the Nasdaq. We had a stalling session before that. So again, kind of getting mixed messages from the market, but we still have to respect this uptrend and respect the the action in a lot of leading growth stocks out there.
Right. We'll take it day by day. And Ken, thoughts on the 10-year yield and the dollar?
Well, obviously, this 10-year yield coming under a lot of pressure. So money flowing into bonds. So you got this kind of safe haven trade working. So you've got at least the bond market, still worried about a sharp slowdown for the economy, and that's a bit of a disconnect with the Nasdaq and the S&P 500, which are on firm uptrends here. But so you've said 1, 2, 3, 4 days in a row where money has flowed into the bond market, and you would think that the support would have held at the 200-day moving average, but it did not today for this 10-year yield. So maybe we'll get down to that 3.5% level and maybe start moving higher from there. But yeah, I mean, the safe haven trade is definitely going on now in bonds.
And now let's take a look at some stocks. CRWD, this is Crowdstrike, security software stock. What an impressive finish to the day here after issuing its earnings report. Showed acceleration on the bottom line, earnings up 84%, top line growth of 42%, still strong, even though it was a slight decline from the prior quarter. So you can see a big upside bar taking shape here, Ken, a reversal higher. And for the day, I mean, what a strong close, coming down to touch that 21-day line with a gap up here at the open. And it really quickly was able to recover and almost went positive for the day.
Pretty impressive. I mean, it was down 11% intraday. The aftermarket loss, the pre-market loss, I mean, it was firmly down, 9, 10% in extended trading. But I think CrowdStrike just showed how it is an institutional quality name in the security software group. It's got excellent fund sponsorship. So you see all the volume that was in the stock today, the heaviest in quite a while. And you say, well, yeah, the stock was down 1.6%. But again, it was down 11%. So there were definitely buyers lifting the stock off that 21-day moving average. Back to the weekly chart here, this is kind of typical of a lot of stocks right now. You've got, multiple up weeks in a row. So you wouldn't want to chase the stock up here. It's at a point where it's probably going to just kind of pause and rest. And there you may see a new entry. But this is a stock, you see that accumulation distribution rating of A+, helped by a lot of above average volume gains recently. So this one, still has the potential to be a market leader. Can't chase it right now, but when the market pulls back and this pulls back, we could see another entry here.
Okay, next on our list to check in on another software stock, Cloudflare, ticker NET, is in the enterprise software group, breaking out of a double bottom base this week. Ken, it did present an early entry when it cleared that 60 level and some resistance within the base here, but a strong week taking shape, no doubt, for Cloudflare.
Well, yeah, absolutely. And this is a company, I think you're right, that buy signal when it crossed 60 was pretty clear. And this is a classic double bottom pattern. I mean, the second leg down in this pattern formed when Cloudflare reported earnings. And wow, what a gap down. But the stock has rallied back in heavy volume. So it's a little bit extended from that 66.20 pivot. But notice how it's coming up against that left side high of 72.41 here. Again, another example where you'd expect this stock is bumping up against resistance there. So maybe it's going to start to drift lower. So many extended stocks out there in the market right now. You really want to just be building watch lists of these strong performers. Cloudflare is a great one for the watch list because it's got the fundamentals that we like to see. It's got the growth, and it's got the technicals as well. But don't want to chase it. Just wait for a pullback and get a better entry.
Makes sense. And let's take a look at TDW. We haven't really talked about a lot of oil and gas stocks this year, Ken, as attention really has shifted to the tech sector and away from the energy sector. But a strong move today for TDW, which is working on a base here, up over 6% today. So can this one make another move higher?
I think it was a compelling price action today. Volume wasn't huge, but it was quite a bit higher than in yesterday and in recent sessions. Another stock that you're seeing no shortage of higher volume, price gains here. So at this point, I would really kind of wait for a move above the 50 level. Let the stock prove itself. It's still, even though it found support at its 50-day moving average, it's still kind of in this consolidation. We can look on the weekly chart. It's a little bit of a wild consolidation. We call this wide and loose. It's got some pretty big weekly wide and loose weekly price swings, but it's the pattern is still intact. Another issue here is that it could be kind of a later stage base, which is what we pay attention to. So it's staged a series of breakouts already. However, the latest down week that Tidewater showed was actually a support week. Volume was pretty heavy. That's it, exactly right there. Closed up near its high for the week. So there are some positive elements to this base. The relative strength line is right near new highs. As the summary says here, it's a provider of offshore, marine support vehicles for the oil and gas industry. So all these companies that are, drilling out in the Gulf Coast or these large bodies of water. Tidewater is kind of in a nice niche market, showing great growth. And look at the earnings estimates here.
Yeah.
Pretty compelling fundamentals. So even though it looks like a later stage move, this is still a stock that could break out. Industry group is not great. 147 out of 197. You got SLB is in this group, and that's been a terrible price performer. You can see in a sharp downtrend here, but TDW is sort of like the lone wolf in this industry group, and typically we like to see good breadth of leadership in an industry group. Don't have it here, but I think this is still one worth watching for all the reasons I just mentioned.
Yeah. Well, thank you so much, Ken, for your analysis today. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, and we hope you join us. Since Monday was a holiday, Scott St. Clair, one of our Monday panelists, is going to be joining us on the show tomorrow. So check it out, investors.com/IBD Live for the details. And make sure you're keeping tabs on investors.com/events for a look at the latest guest lineup for all of our different shows and things that we've got going on. It's a great URL to bookmark. Thanks, everyone. We'll see you back here tomorrow to wrap up the week.